Hi everyone, welcome to my channel. I'm Doris. I'm here to show you about my stock account and today's market update. Today's net asset of my account is 64,869.42. Today's PL is a gain of $250. And let's take a look at the individual performance of each stock. Today, Apple has closed higher to $173. SQQ closed higher to 10.96, and then SPY closed lower to 514.95. United Natural Gas closed up 15.57 per share. Dow Jones Industrial Average closed down 0.35%. Nasdaq closed down 0.3%, and S&P 500 closed down 0.2329%. The industries that have led with a loss is semiconductors and auto manufacturers, each with a loss of more than 2%. And then let's talk about the Fed economic data that's released recently. So on Thursday, the PPI for February has been released, and it's supposed to be rising 0.6% month on month, which is the largest increase since October last year. Compared with an expectation of just 3%, which further just indicated a possibility of sticky inflation. In terms of annual rate, US PPI increased by 1.6% year-on-year in February, and the growth rate was also higher than the expected 1.2%. And the previous value was revised from 0.9% to 1%, excluding food and energy prices. The core PPI in the United States increased by 2% year-on-year in February, higher than expected of 1.9%. Generally, the main reason for the PPI higher than expected is the rise in the fuel and food costs, which further indicated that inflation is still rising. The data suggests the path for the policymakers may keep the interest rate high for a longer period of time than what investors have been expecting. Data released on Tuesday said the CPI rose to 3.2% year-on-year in February, higher than the market expectation of 3.1%, and the previous value of 3.1% rose 0.4% month-on-month, in line with market expectation. The core CPI, though, rose 3.8% year-on-year in February, higher than expectation, and collectively, this shows that the stickiness of U.S. inflation. Steve Blitz, chief U.S. economist at TS Lombard, said, if inflation data continues to rise like this, it'll become increasingly difficult to justify a preemptive rate cut. Taken longer, these data suggest that disinflation has stalled and looks like it's reversing. While soaring energy prices largely contributed to the rise in the U.S. CPI and PPI in February, there is also evidence that rising in the energy prices of goods such as airfares, used cars, and beef has put broader pressures. In fact, the goods price index jumped 1.2%, the biggest increase since August 2023, as the focus shifted from service to inflation. These data suggest that the persistently high prices appear to have an impact on consumer expectations and behavior. While inflation is well below its peak in mid-2022, it has proven resilient after the Fed raised interest rates by a cumulative 525 basis points and cut nearly $1.4 trillion in bond holdings. At the policy level, the data could mean that the Fed may keep interest rates high for a longer period of time. After the CPI and PPI data got released, the U.S. Treasury yields climbed further on Thursday as the U.S. PPI February got released overnight. Market data shows that the U.S. Treasury yields of all maturities not only rose for the fourth consecutive trading day overnight, but also expanded significantly. Among them, the 10-year Treasury bond, known as the anchor of global asset pricing, recorded its biggest one-day increase since mid-February, and the yield is also approaching the highest level this year. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.